Welcome to The Explainer. We're all about breaking down the big signals, the ones shaping our financial world. And today, we're going to connect some dots between some really unusual players to figure out where the smart money is actually headed.
All right, so let's just jump right in with a question that, well, it's going to seem like it's coming out of nowhere, but stick with me because the answer, it reveals this massive shift that's happening right under our noses. It's all about a fundamental change in how the biggest players are thinking about the future of money itself. So here's how we're going to tackle this. First, we'll look at this unlikely alliance. Then we'll dig into why they're hedging against a crisis. After that, we have to talk about the all-important liquidity question. Then we'll decode what the market's telling us, and finally, we'll get to the final verdict.
Okay, so let's kick things off by looking at these two institutions. They're, about as different as you can get, but they've made the exact same surprising move. And this isn't just some small thing. It's a move that cuts right across politics, academia, and finance. I mean, look at this. On the surface, a state government and a university endowment, they couldn't be more different, right? You've got a public pension fund, it's a political entity. And then you've got a private, long-term fund for one of the most elite universities in the world. They operate in completely different worlds with totally different goals. And yet, here's the kicker. They've landed on the exact same really unconventional investment. They are both buying Bitcoin. Now, this isn't some random flyer, okay? It's a calculated strategy. And that tells us something really, really profound about the financial landscape right now. So, Texas, they actually became the first U.S. state to do this, putting in $5 million. And look, $5 million isn't a huge amount for a state, I get it. But the symbolic impact, it's massive. It sets a precedent, and you can bet a lot of other people are watching this very, very closely. And then there's Harvard. They went even bigger, a full 8% of their massive endowment. We're talking about one of the most respected long-term investors on the planet, making a major move here. So that's the real question, isn't it? What do they see coming? So yeah, the crucial thing here isn't just what they're buying. It's why they're doing it, and why now. You have to ask yourself, what are these big, smart money players seeing on the horizon that's making them look for alternatives, outside the normal system? And this quote, it just nails it. The monetary order is crumbling, and these people are taking positions for the new order to come. That's it, right there. Both of these institutions are sending a crystal clear signal. They're hedging. They're betting against the risk that our traditional money systems are, breaking down over time. They see instability coming, and they're getting ready for whatever's next. And this chart, this shows you exactly why they're worried. Look at that bar on the right. That's the U.S. government deficit right now. Notice anything? It's already climbed back to the same crisis level we saw at the absolute peak of the pandemic in 2020. That kind of spending, it just screams more debt, which over time can really eat away at the value of our money. So this tidal wave of government debt, it leads us straight to the engine room of the entire financial system. And that is liquidity. It's the invisible force that moves, basically everything. So what is liquidity anyway? Let's keep it simple. It's just the amount of cash sloshing around in the system. The easiest way to think about it is like fuel for the market's engine. And it's not just how much fuel there is, but which way it's flowing. That's what decides where asset prices are going to go. Simple as that. And here's the thing. The pressure from all this public debt, it's getting so big that most people expect the Fed won't have a choice. They're going to have to step in. And to stop a crisis from blowing up, what do? They'll almost certainly have to inject more liquidity. Yep, more fuel right into that engine. Okay, so theory is one thing, but how can we actually see this playing out right now, in real time? Well, let's turn to the markets and play detective for a minute. We're going to look at two key indicators that are giving us some major clues. Clue number one, the US dollar. It's the world's reserve currency, right? So it's basically a giant barometer for what's happening in the global financial system. So here's a general rule of thumb for you. When the dollar gets weaker, it usually means money is flowing out into other things, other currencies, other assets all over the world. In other words, global liquidity is expanding. And what are we seeing right now? The dollar's strength is starting to fade. It's a pretty big sign that the taps are being turned back on. All right, clue number two. This one comes from a corner of the market that not everyone watches, but it's super important. We're talking about bond market volatility, and we measure it with something called the MOVE index. And guess what? That index, it has been dropping a lot. When the move index falls, it tells you that the stress is coming out of the money markets. Think of it like the plumbing of the whole financial system finally unclogging. It's another really powerful signal that liquidity conditions are getting better.
Okay, let's take a quick step back. We've got huge institutions hedging against the dollar weakening. We've got clear signs that liquidity is starting to flow back into the system. So now let's put the final pieces of the puzzle together and see what the whole picture looks like. So where's all this new liquidity actually going? Well, you can see a perfect example in the AI race. Money is clearly rotating. It's flowing into what the market sees as the winners, like Google, whose stock is in a nice, clear uptrend. At the same time, a giant like Nvidia is kind of stuck in a corrective phase. So what does this tell us? Capital is definitely flowing, but boy, is it getting picky.
But what about the most powerful signal of them all? I'm talking about the VIX index, Wall Street's so-called fear gauge. And right now, it is absolutely collapsing. To put it simply, fear is leaving the building.
So let's put it all together. You've got major institutions making long-term hedges. You've got clear signs of more liquidity, more fuel coming into the system. And you've got fear just collapsing in the short term. It all leads to one pretty provocative question, doesn't it? With more fuel in the engine and fear heading for the exits, just how high could this market actually go?